Hi everyone, Josh Gilbert here and welcome to Stock Break, where I give an in-depth analysis on public companies in under 5 minutes, breaking down their fundamentals and potential valuation. So let's dive in.
Hello everyone and welcome back to another episode of Stock Break. Today we're going to be looking at Alphabet. It's the parent company, as I'm sure most of you will know, behind the giant that is Google. So we're going to find out today, can the business keep delivering advertising growth as it looks to win big in AI? Let's find out. But before we get started, a quick reminder that this presentation is for educational purposes only. It should not be taken as investment advice or a recommendation to buy or sell any financial instruments. So with that being said, let's get started. Google was founded back in 1998 by Sergey Brin and Larry Page in a Californian garage. Fast forward to 2015, Google transformed into Alphabet. Essentially, it was reflecting its expanding business beyond just search. While the company generates most of its revenue from digital advertising, its footprint now stretches across multiple sectors. And I thought this was quite interesting to sort of start us off. As Sergey and I wrote in the original founder's letter 11 years ago, Google is not a conventional company and we do not intend to become one. And I think that is a really great point of where Google is today. They continue to innovate. So now we're going to have a quick look at essentially its business model. So the first part is Google Services. This is Alphabet's powerhouse. It's Google's search engine, YouTube, and everything from images to maps. And it dominates the digital world. Each day, Google handles over 8.5 billion searches. It generates billions in ad revenue. While then we have YouTube, which is actually the world's second largest search engine, brings in massive ad dollars as well. Then you've got Android. It has over 3 billion devices worldwide. It earns revenue from app sales, subscriptions, and Play Store fees, and is actually the most used operating system worldwide above iOS, Samsung, and other names. Then we've got Google Cloud. This is Alphabet's fastest growing segment. It's competing directly with Amazon's AWS and Microsoft Azure. It powers businesses, it stores data, it runs applications, and it essentially helps companies build AI tools as well. It is still behind AWS and Azure, but it is catching up and it is seeing rapid growth, especially with the surge in demand for AI and cloud services. And then we have its other bets segment. This segment essentially includes Alphabet's more experimental ventures. So it has Waymo, which is self-driving cars, DeepMind, AI research, and Nest. I'm sure you've all heard of it, the smart home devices, the little Ring doorbells, essentially. Some of these projects could shape the future, while others might never generate any significant revenue. But what this has all done is it meant that shares have climbed pretty significantly. They're up over 670% in the last decade. They've pretty much rewarded investors very, very well. They're, in that time, a 22% annualized return. It has split its stock 3 times to make shares more accessible. So we're now trading around about $193 at the time of recording this. Over time, it has been in the thousands of dollars. And a little fun fact for you before we continue as well. I mentioned YouTube there. Alphabet actually bought YouTube for $1.65 billion in 2006. Now YouTube generates that amount for Google, or Alphabet, I should say, in revenue every 2.5 weeks. So pretty good investment. So we're going to have a quick look at its Q4 reports. The results were a little bit underwhelming. Revenue was up 12%. Year over year, we reached 96.5 billion. It did miss analyst estimates. The cloud business, which has obviously been the focus, this is a key revenue driver, also fell short of expectations. There were some bright spots though. Search and advertising were pretty positive as well. YouTube came in better than expected also as well. So to go through those numbers, 96.47 billion in overall revenue. Ad revenue was 72 billion. YouTube ads were 10 billion and Google Cloud revenue was 11 billion as well. And I think what's important here is that Google's ad revenue does continue to grow, but it is a mature business. It's a very much mature business. And analysts do expect growth to slow in that segment of the business. That growth to slow in the year ahead. The real focus for investors is going to be on cloud. And this is where Alphabet is seeing impressive growth. Operating income in the cloud was up over 250% in 2024. Cloud revenue is growing rapidly, but it did fall short of expectations slightly in Q4, which sort of kind of raised concerns a little bit over the effectiveness of its sort of heavy investments in AI. Those that spending on AI and on infrastructure, it is sort of worrying analysts a little bit, because we're going to have a quick look here at this section here. And this is from their report. Essentially, they said they're going to spend $75 billion on capital expenditures in 2025. So that is a bit of a worry, especially if they're not seeing if the market isn't seeing the growth that it expected. But on the other side of that, they finished 2024 with $95 billion in cash, and they made $100 billion in net profit in 2024. So look, we're very well positioned to weather any short-term challenges. And I think, look, this is going to only help it continue its long-term trajectory. Now we're just going to have a quick look at its valuation and the business model a little bit more. Look, I think the company's push into AI is really exciting, and its cloud business is gaining momentum. However, it must overcome challenges from fierce competitors like Microsoft, Amazon, and Meta. And of course, we still do have some regulatory pressures looming large as well with the Department of Justice. Looking at its valuation, currently trading at 21.5 times forward earnings, and for me, I think that looks still pretty attractive. When we compare that to the S&P 500, the S&P 500 is trading at 23 times price to earnings. Alphabet outperformed the S&P 500 last year. I'd expect it to do the same again this year. Analysts have it at 59 buy ratings, 15 hold, no sell ratings. Average price target of about $218 from the time of recording. That's about a 14% upside. However, the Guru Focus Tracker does see the stock as modestly overvalued at current levels, but it does rank its profitability at 10 out of 10. Look, maybe the reason for that overvalued mark is because maybe essentially they're not sort of seeing the growth coming through as many had expected. So we need to see that growth in cloud for shares to rise. So look, its traditional advertising business remains solid. Its future growth, though, does hinge on AI, cloud, and the development of its other bets. If Alphabet can maintain its competitive edge in AI and cloud and manage those regulatory risks, it could continue to deliver strong returns for investors. As I say, given its strong position, search, advertising, and cloud, I think it remains a stock to watch, but obviously keep an eye on the challenges ahead. Thanks for watching Stock Break. Let me know in the comments what you think of Alphabet, and to stay ahead on all things investing, follow us on all podcast platforms. Just search for Digest and Invest.